Hey trader, Steven here. I wanted to put together a quick video on the top ETFs so far for the week, right? Because on Tuesday for my members, I definitely put out the top stock ideas. I want to put out the top ETFs, because this market is constantly changing, money is flowing, and especially right now with a lot of the growth stocks being technology stocks, they're extremely extended. Some of these other sectors, countries, ETFs, they're going to play catch up, right? They got to play catch up. So what I have here is I have a list of 239 ETFs that I track. Is it all of them? No. But is it enough to find opportunities? Absolutely. And then I rank them by what is the percentage change up for the current week. And this is Monday through, I'm shooting this Thursday morning, so these numbers are really only Monday through Wednesday. So that way we can kind of have a good idea, maybe find some extra opportunities Thursday, Friday throughout the week. So if we look right here, we look at Brazil ETF, EWZS is up the most. If I look on the weekly chart, that is not a reversal pattern, but you can see right here clearly, it got rejected multiple times at the 20-day moving average, and then it tried to roll over. It failed to fail, and now it is popping. What that's telling me is if it failed to fail right here and then came right back, this could rally pretty strong, at least, up into kind of that 50-day moving average range, probably even higher. So Brazil is something to look at. A U.S. industry that is popping is home share construction, ITB. You can see right here again. I think it's safe to say that this could be lagging, has been lagging the overall market a little bit, and then all of a sudden the last few days it is really, really popping. I haven't read into the news. Maybe some home builder numbers came out. They weren't as bad as expected. I don't know. I don't know the fundamental reason behind it, but now it's starting to rally. So you're starting to get a lot of commodities that have really been hurt bad. You can look at this IEO. You can look at IEZ. They kind of look similar, but IEO sure does look better. So we'll focus on that. Look, now this ETF, it now all of a sudden popped on Wednesday above the 50-day moving average for the first time since early January. So this ETF had problems, the oil and gas exploration ETF, well before the coronavirus started happening. And as you can see, it's had problems for a very, very long time. And that's why buying and holding commodity ETFs for like very long times, it can be incredibly difficult because you can go years and years and years, if not decades, where a commodity underperforms. There has been studies done that shows that if you actually buy and hold the commodity, you're actually, they outperform over time, or at least in the 70s they did when you had all those oil runs. The commodity themselves beat the actual companies that produce them. But anyways, that was a long time ago, but this is now popping above the 50-day moving average. That is a personality change. Am I excited about oil? No. Do I still think all these companies are going to lose money? Yeah, I do. So does that mean they're going to rally? I mean, does that mean they're not going to rally? No, they could still absolutely rally. So, if I were to kind of be looking at oil stocks, which I'm not, just because I'd rather focus on something that's making money, I think now might not be a bad time to really stick your toe in the water, take a stab. If something like this, were to roll back below the 21-day moving average, or just use a 10% stop loss, then let it go. So you got more Brazil, Latin America. Let's look at the steel. So a lot of steel. Look at this. This is nice. You got an uptrend, right? A pause, a breakout. And that right there was a clear breakout in steel. So that ETF is looking pretty interesting, pretty strong. Clear as day to me. It's got that volume pop. It's got huge volume right here. Low volume pullback on the consolidation days. And then a lot of buying stepped in. I wonder if any news. I don't see any news. But let's just keep going. So you have MLP. Looks like the oil ETF, so nothing new there. Mortgage REITs, let's look at that. Kind of looks like the steel, they're just now starting to come around. So, if you're looking for some long-term opportunities that aren't extended, I guess you could play down here, but these ETFs that are leading this week are the laggards. Let's compare this ETF right here to QQQ that is almost, getting closer, maybe 5-10%, I don't know how to calculate off the top of my head, to an all-time high. So there is no comparison between QQQ and, in my opinion, something like this. Is there more potential reward in something like this? Sure, but there's a lot more risk. So, and your failure rate is higher. So you're going to have a lower win ratio when you take lagging trades versus leading trades. So just kind of keep that in mind. And I'm just kind of looking down here. I'm seeing a lot of commodities. Yep, look at that. We're seeing the same kind of looking chart. This looks like the steel chart, right? Nice little uptrend, bull flag, consolidation, whatever you want to call it, break above the 50-day moving average. Looks bullish to me. Here's something that is a little interesting. You have the Bitcoin ETF right here, and I do own a little bit. Really broke out kind of right here. I wouldn't call this a great breakout, but you can see right here, surged on this day, had a nice volume day, and then it really surged 14% yesterday. So, you could wait for the next pullback, maybe in this zone, see if it pulls back. It's probably a little bit extended right now. And this isn't a great pattern, by the way. This is in, if you look at the weekly chart, it's trying, you have a weekly reversal pattern way down here, but it's trying to climb its way back. Who knows if it will or won't, but it's really just back in the middle of a consolidation. So we'll just kind of have to wait and see. More energy. Let's look at clean energy. Yep. So this ETF actually looks better than the oil ETFs because look, it's above the 50 and it's above the 200-day. So sold off really hard, got cut in half, 50%. But this clean energy ETF this is, in my opinion, this is kind of the breakout point. It broke above the 50, it broke above the 200-day. This could be a nice little entry. Don't risk any more than 10% on any trade, stop loss wise, or 1% of the overall account. Now, when I say risk 1%, I don't mean if you have a 100,000 portfolio, you can only put 1,000 in the trade. I mean, you only can risk 1,000 on the trade. That means if you put 10,000 in one trade, you have a 10% stop loss. That's $1,000, right? There's your risk right there. So, again, I think I'm seeing one other ETF that I do want to point out because you're seeing a theme here. You're seeing a lot of emerging markets, a lot of commodities starting to rally a little bit. And again, they usually are the lagging indicators. So, right now, they are the lagging markets. Just one other ETF that I want to point out is the cannabis ETF, MJ. Now, this has been down for 13 straight months, and I realize you could draw this trend line in multiple different places. But I think that's a pretty good place to draw it. It has a lot of touches, right? Failure, failure. And now it's trying to break through, and I would not call this a breakout. It really needs to kind of make a definitive pop to be a breakout. But if it does, you got some volume coming in. It looks like right here, popped off the bottom, sideways. The sideways, there's no real distribution, so you had accumulation on the up. You had quiet, and then you got a little bit more volume coming in. If you were to try to pick a bottom in cannabis stocks, I think this is where you would want to try. For the reason being that, one, it's changing personalities. And this probably has a higher than normal failure rate just because it's in a downtrend. So when you're trying to buy reversals, that are in a downtrend like this for 13 months, it has a higher fail rate, okay? You have to understand that. However, I do believe, and this is just more of a belief than an actual fact, I do believe that, once the market starts to pay attention to the presidential cycle, if the market feels that the country could go with a more cannabis-friendly president. I'll just put it at that. That these stocks could really rally. Because right now the current administration, I mean, they're not doing anything to lift any bans. It's all state by state, which is fine. I'm not taking a position. I'm just saying that, it could be, these could rally up until November. So we'll just wait to see with that. So I hope that was helpful. Let me know if you have any questions.